And Kritika Saxena report that the real estate sector is waiting for tax-related clarifications and the removal of anomalies before they go ahead and list REITs.
IRB Budget 2016, now or never, on the CNBC network.
Over a year ago, market regulator SEBI cleared the way for REIT listings in India to help developers take advantage of the massive rental income potential in the country, up to 52,000 crore rupees according to some estimates. Would also reduce the risks involved in real estate investments. But developers say they want more clarity on policy parameters like taxation before jumping on board.
I think this is the right time. This needs to be resolved because there's a good amount of money which is available and a good amount of money which is expected to come into the REIT. And if we are going to look at the success of the REIT will depend only on this particular thing. Unless we are able to have a right taxation climate, it is not going to be a success.
The key tax at play here is dividend distribution tax, since REITs essentially allow investors to pool money to buy listed units of real estate properties and using rental incomes from these projects to pay dividend. This means 15% of the dividend paid out goes to the taxman. Now globally, DDT has not been much of an issue because REITs offer much higher returns than fixed instruments in banks. But that gap is so low in India that there is no incentive for investors to move money from fixed deposits to REITs.
With all the tax, that returns and perhaps not as attractive for retail investors. So I think the advantage is not so much to the developer. It is ultimately in the hand of the investors that if you remove DDT, there will be a little bit more left for them.
However, tax experts say removing REITs from the DDT net may not be a viable option for the government.
Honestly, while the industry is asking for reduction in there, it seems little difficult to happen because if you take mutual funds or AIF, there's no such exemption, and if you treat REIT and InvIT at par with as a pass-through with mutual funds, it possibly looks difficult for the DDT to come through as a waiver in this budget.
Apart from a DDT waiver, players hope Budget 2016 will bring clarity on a few unintentional anomalies as well, like a 3-year lock-in period when most equity mutual funds work with a 12-month lock-in period. In Mumbai with Kevin Lee, Kritika Saxena.